This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Profit soars. People can't stop shopping on Amazon. Sales are up and so are earnings. But why did the stock fall on its results?
Investing in the Trump era, how investment advisors keep a long-term focus amid the fast pace, the uncertainties, and the tumult of the Trump administration.
Next flashpoints from trade to foreign policy. Are there areas of the world that investors need to watch extra closely? Those stories and more tonight on Nightly Business Report for Thursday, February 2nd.
Good evening, everyone, and welcome. Well, they were on just about everybody's doorsteps during the holidays. Amazon packages, of course. The retailer captured, believe it or not, 40% of total online holiday sales. And tonight, all of that shopping showed up in the company's quarterly results. Here are the numbers. Amazon earned $1.54 a share. That was 19 cents better than expectations and translates into a 55% rise in profit, making for its seventh straight profitable quarter. Sales rose too. They were up 22% from a year ago to $43 billion. But that figure was below estimates, as was the revenue outlook for the current quarter, and that pressured the stock initially in after-hours trading, as you see there. Deirdre Boza has the one key takeaway from Amazon's quarter.
Investors may have been extra disappointed that Amazon's revenue in the last quarter fell below expectations because Q4 has traditionally been the strongest quarter thanks to holiday sales. The company even saying that it saw its best holiday season ever. However, EPS beat the street's estimates, and that makes it 7 straight quarters that Amazon has been in the black. Deirdre Boza, CNBC Business News, San Francisco.
Despite Amazon's pullback in late-day trading today, the stock is up more than 7% this year, similar to other tech stocks. In fact, the tech-focused NASDAQ 100 has risen more than 5.5% since the start of 2017, easily outperforming both the Dow and the S&P 500.
But there are some headwinds and additionally some tailwinds, but those headwinds could derail the rally that has been going on in the tech sector since the beginning of the year. Scott Kessler is head of technology sector equity research at CFRA Research, and he joins us now to discuss. Scott, bottom line me here, technology's off to a good start. Can it keep it up?
To some extent, we think so, Tyler. You know, it's basically tied for first as the best performing S&P 500 sector, at least through January, up 4.2%. And we think that really reflects a couple of realities. One is these stocks were not, let's say, loved post-election. A lot of people are gravitating to sectors and names that people thought would benefit disproportionately as a result of the election of now President Trump and a Republican Congress. But what we've seen, at least in 2017 thus far, is people are realizing that there could be benefits as a result of the political changes, as well as some other catalysts for the sector going forward.
All right. There are some negatives, though, that you've given us for the tech sector, and one is the strong dollar.
Yeah, Sue. So when we think about the technology sector, we think about a group of large companies that has a very international focus. And so if you think about for 2015, the sector generated a large percentage, actually the second highest percentage of any sector's revenues outside the U.S. So we think a strong or even increasing dollar against major currencies like the euro, British pound, Japanese yen, that's a negative for a lot of these companies.
Two other areas that could be headwinds that you enumerate are trade restrictions. Obviously, a lot of tech companies import a lot of product. They could be caught by that border adjustment tax if it goes through. And the other is H-1B visa concerns about the ability to attract the skilled workers that tech companies say they need.
Yeah, so I think the first item of the two you mentioned, Tyler, I think it's pretty self-explanatory, but it's probably most significant for a lot of the companies that are responsible for producing goods that are under, say, a U.S. brand umbrella, like an Apple, for example, but a lot of the sourcing and manufacturing actually occurs outside the U.S. And then the HB1 visa situation, look, I mean, the president a year ago or so was talking about the need to reform the HB-1 visa program because, frankly, a lot of entry-level workers were making use of that program. And I think a lot of people now want to see that reformed. And then we saw legislation introduced just last week to make some significant changes, interestingly, from a Democratic representative from Silicon Valley.
Right. All right, Scott, thank you very much for that summary of the pluses and minuses on tech. Scott Kessler, CFRA Research.
On Wall Street, stocks finished the day mostly flat as investors analyzed the day's earnings, looked ahead to tomorrow's jobs report, and kept watch on the growing tensions around the globe. The Dow Jones Industrial Average dropped 6 points to 19,884. The Nasdaq was also off 6, and the S&P 500 rose 1.
Well, we're more than halfway through earnings season, and it is clear now that the new administration is having an impact on business. According to the Wall Street Journal, of the more than 240 S&P 500 companies that hosted conference calls in January, 1/2 mentioned new President Trump either directly or indirectly, and most of the companies urged patience and optimism, despite some of the policy uncertainty issuing from Washington.
And that uncertainty is also being felt by investors who are trying to figure out what they should do with their money in this fast-changing environment. So Mike Santoli went to San Diego to see what investment advisors are doing in this new Trump era.
Nearly 3 months after Election Day, investment advisors are convinced the investment landscape has shifted dramatically under President Trump. But as 2,000 registered investment advisors gathered in San Diego this week for TD Ameritrade's annual advisor conference, they were still sorting out exactly how these shifts will play out. A survey of these advisors found 83% believe Trump policies will be a major factor affecting their client portfolios.
Advisors and their clients are probably feeling a lot more optimistic right now with more business-friendly and market-friendly policies that seem to be on the table. You know, we're seeing advisors excited about, maybe a little bit more of a pro-business environment, reduced regulation or reduced complexity in the regulatory environment, I would say.
At least initially, they're betting the net impact will be positive. Almost 70% came into the year optimistic about U.S. economic growth, the most upbeat result in 8 years. And 53% are bullish on stocks, while 70% think bonds will lose value as rates climb. They're steering clients out of the conservative, dividend-rich sectors that benefit from slow growth and low rates, such as utilities and consumer staple stocks. They like financials and industrials, embracing a consensus that has become known as the Trump trade. Yet some advisors are concerned about the way the president's erratic messages on trade, corporate behavior, and foreign relations could spook markets.
When President Trump goes out and tweets something, again, I go back to very knee-jerk reactions, very reactive, instead of really thinking things through. I think that he needs to have that, when we sometimes put a child who's not behaving, we got to kind of put him in a timeout. I think Mr. Trump, I think what you need is a timeout.
For now, markets have remained quite calm amid President Trump's often provocative tweets and public remarks, with stocks hovering near all-time highs. Perhaps this means investors are willing to look through the daily noise toward the prospect of business-friendly tax cuts and deregulation. Yet as the markets adjust to a new president with a taste for confrontation and impatience with the status quo, investment advisors might have to work extra hard at a key part of their job, keeping clients focused on the long term. For Nightly Business Report, I'm Mike Santoli in San Diego.
President Trump's comments on Iran got the attention of investors today. The president said that, quote, nothing is off the table following that country's test launch of a ballistic missile. House Speaker Paul Ryan said the U.S. should stop appeasing Iran, and many Republicans say they would be in favor of additional sanctions on the country. Other presidents, by the way, have echoed Mr. Trump's statement. Former President Obama also said that military options were not off the table to prevent the country from getting a nuclear weapon.
So with growing tensions between Iran and the U.S., where are some other places around the world that you should be watching more closely? Jeff Kleintop joins us. He is the Chief Global Investment Strategist at Charles Schwab, and he's here to fill us in on that. Good to see you as always, Jeff. Welcome.
Good to see you, Sue.
You know, what are you watching? Obviously, Iran was front and center in today's trading session and probably will be for some time now. But it's a big world, and there are a lot of disparate events that are scheduled to happen, such as Brexit and that. What are you watching most closely?
Well, there are a number of those political events, like you talk about Brexit. There's certainly elections in Europe, but those are all on the calendar. It's the unscheduled surprise events that could really have a big chance of moving the market. Iran and sanctions there. But looking overseas, the leader of North Korea announced this year that he's planning on testing an intercontinental ballistic missile capable of reaching the U.S. Anything that could involve a military conflict with the U.S. is going to get the market's attention right away. So if they do test that missile, will there be a response from the Trump administration? Other areas, maybe in the South China Sea, there's been some interaction between China's Navy and the U.S.'s Navy. An escalation there would certainly be something that would get the market's attention as well. Because remember, we're trying to figure out what the Trump doctrine is on foreign policy. And so the market's going to extrapolate even small interactions into much bigger things.
What about the Middle East? Obviously, Syria is a sort of non-functioning state, some would say, and Iraq may be the same. And then there is the announced intention of the Trump administration to move the U.S. Embassy from Tel Aviv to Jerusalem. That could destabilize the situation in the Middle East, couldn't it?
It certainly could. Jerusalem, the Palestinians would like Jerusalem to be the head of their state. So that would certainly inflame conflict there. Also, if the Trump administration were to pull back, as he's mentioned, on support for rebels in Syria, that might mean Turkey and Saudi Arabia may step up in support for Sunnis, and you've got a proxy war there between them and Iran. All of that could certainly inflame tensions. But I'd also mention the fact that Russia has renewal of their sanctions coming up this summer, and they could look to stir up trouble. Maybe in Romania, we're seeing protests right now in Romania over some changes to policy on anti-corruption reforms that sought to limit Russian interaction in Romanian politics. Look, there are a lot of areas in the Middle East and in Eastern Europe where we could see some of these things show up and have some effect on the markets.
Jeff, thank you very much. Appreciate it.
My pleasure.
Jeff Kleintop with Charles Schwab.
And still ahead, why Harley-Davidson, the all-American brand, is once again getting a lot of buzz. More earnings news. Merck's profits came in as expected in the most recent quarter, but revenues dipped just a bit. The Dow component was hurt mostly by generic competition. On the other hand, bright spots included growth in its oncology, diabetes, and hepatitis C drugs. The drug maker also said profits for 2017 be roughly in line with Wall Street expectations. Investors found that outlook reassuring, considering the increase in drug development costs, and shares moved about 3% higher.
Fellow Dow component Visa reported better than expected quarterly profit and revenue thanks to higher payment volume growth. The world's largest payments network operator earned 86 cents a share, 8 cents better than estimates. Revenues were up 25% to more than $4 billion. And that sent shares initially higher in after-hours trading. Kayla Tausche has the one key takeaway on Visa's results.
Visa is a global company that facilitates transactions and payments all across the world in the trillions of dollars. So what investors were looking for was a sense of how the global volatility in the markets was potentially affecting the company and its volume. Well, the short answer is not that much. Payment volume grew 47% in the company's first quarter. That was exactly what Wall Street was expecting. And the company's CEO says we're seeing good momentum in the business driven by domestic and cross-border volumes. That being said, the company did reaffirm its guidance for the year, but said that currency volatility or the impact of foreign exchange rate fluctuation will take a little bit of a bigger bite out of its bottom line. For Nightly Business Report, I'm Kayla Tausche.
Well, Macy's may be open to selling itself, and that is where we begin tonight's market focus. The New York Post says the retailer is willing to hear buyout offers so it can avoid a potential board shakeup that could dent departing CEO Terry Lundgren's reputation, among other things. The report added that one of Macy's shareholders, activist hedge fund Starboard Value, is unhappy with the company's financial results and may look to advocate for management changes. Shares of Macy's up 5% on the session at $30.72. Ralph Lauren said its CEO, Stefan Larsson, is going to step down from the clothing retailer on May 1 following a disagreement with founder Ralph Lauren regarding creative strategy. Never a good career move to disagree with the founder, I suppose. The company said the departure was mutually agreed upon by the two gentlemen. Ralph Lauren also reported earnings above expectations and reaffirmed its 2017 guidance. Shares down 12%, though, 76.61. And the media company CBS said it has reached an agreement to sell its radio business to the broadcasting company Entercom. The merger will result in an outfit that operates more than 200 stations around the world. CBS shares fell fractionally to 64.14. Entercom surged nearly 11% to 15.70. And the infant formula maker Mead Johnson may soon be taken over by the British consumer goods company Reckitt Benckiser. The owner of the Lysol and Woolite brands said late yesterday that it was in advanced talks to buy Mead Johnson for nearly $17 billion. Don't mix the Woolite with the baby formula. No. Mead Johnson shares soared 21% to 84.38.
Despite posting lower profit and revenue in its latest quarter, the New York Times beat street expectations thanks to a surge in digital subscriptions. CEO Mark Thompson said the decline in earnings doesn't tell the entire story.
Our print circulation, our home deliveries, they're also growing at the moment. For the first time in many quarters, actually, we've got more people coming to get the physical print newspaper. Our digital business is going very well. You'll see we got very strong growth in digital advertising and spectacular growth in digital consumer.
New York Times shares were unchanged on the day at $13.55. Chipotle said an increase in wages and higher prices for avocados caused profit to fall and miss estimates. The burrito chain posted revenue in line with forecasts, but saw its same-store sales fall by nearly 5%. But the company did say it expects those sales to improve and rise by high single digits this year. Shares initially rose in after hours and finished the regular session up a fraction to $423.30. And GoPro saw its loss widen, but the results still beat analysts' expectations. The wearable camera maker said slower demand during the holiday season caused sales to fall and miss estimates. The company also gave guidance for the current quarter that was below street forecasts. GoPro shares initially plunged more than 10% in extended hours, giving back a nearly 4% gain in the regular session, where they closed at $10.97.
President Trump met with executives today from a company that is really a part of the fabric of America, Harley-Davidson. The executives drove up to the White House on what else? Harleys, putting this iconic brand back in the spotlight. Landon Dowdy has more.
With more than 100 years of manufacturing experience, Harley-Davidson is known for riding high on its Made in America strategy. The motorcycle maker's brand strength and dealer network allow it a dominant position in the U.S. motorcycle market.
I think the reason that it's so iconic is really because it's remained an American manufacturing powerhouse. They've never moved outside of the country. They've never tried to manufacture in places like Mexico, unless there's been a country with real tariff consequences, maybe like Brazil or India. They've stayed really loyal to remaining an American brand.
But lately, Harley-Davidson is all revved up with nowhere to go, which begs the question, is the American icon slipping? Earlier this week, Harley reported disappointing fourth quarter results as 2016 motorcycle shipments fell 12% year over year and are not forecast to grow in 2017. Harley's problem? The 2016 models aren't selling as well as they'd hoped, and there's a limited supply of the hot new 2017 models. Economic uncertainty, unfavorable foreign exchange rates, and heavy discounts by competitors are further complicating the picture. The result? Flat sales in the U.S., mirroring an industry-wide trend seen for the past 3 quarters. Today, Harley executives rolled up to the White House, where the president focused on American production.
In this administration, our allegiance will be to the American workers and to American businesses like Harley-Davidson.
This isn't the first president to meet with the American icon. 3 of the last 5 presidents, including Ronald Reagan, George W. Bush, and Bill Clinton, have met with Harley-Davidson at their Milwaukee headquarters. While today's meeting put the focus on manufacturing and jobs in the U.S., Harley's challenge remains finding consumers to hop on those American-made bikes. For Nightly Business Report, I'm Landon Dowdy.
While Harley-Davidson has long manufactured its motorcycles in American factories, as Landon just mentioned, it reportedly outsourced part of its information technology unit. A report on CNBC.com says that in 2012, Harley signed an agreement with Infosys, an Indian tech staffing company, to take over a portion of its IT department.
While the president and Harley-Davidson execs met about jobs, the Labor Department reported a greater than expected decline in Americans filing for unemployment benefits. It's the latest positive piece of data that show a tightening job market ahead of tomorrow's monthly employment report. Hampton Pearson takes a look at what investors can expect tomorrow.
Ahead of Friday's jobs report from the Labor Department, we learned that fewer Americans applied for unemployment benefits last week, continuing a dramatic decline over the last year. Just over 2 million Americans are receiving unemployment benefits, down 8% from a year ago. Experts say low claims are a proxy for layoffs, with employers reluctant to let workers go in a tight labor market. And earlier this week, in a closely watched survey of private sector job growth, employers hired some 246,000 new workers last month, far above the overall consensus forecast of 174,000 jobs, with the unemployment rate holding steady at 4.7%.
We could see an upside surprise, most notably because in the retail sector, we didn't hire up a lot during the holiday season. And even though we're seeing that restructuring from bricks to clicks and a lot of store closings, that's not going to happen until sort of the February through April period.
At the first Federal Reserve meeting of the year, monetary policymakers predicted further tightening of the labor market. Leading economists will be looking for signs of more wage growth and which sectors are leading the way.
We're looking to see continued gains in the healthcare sector. That's one we're going to have to watch going forward because uncertainty about the extension of the Affordable Care Act could cause some consternation and some hesitancy to hire going forward.
In the coming months, the Trump administration policies on trade, immigration, taxes, and infrastructure are expected to impact the outlook for jobs. For Nightly Business Report, I'm Hampton Pearson in Washington.
Coming up, calling the right plays. Is the NFL scoring a touchdown with fans? Uber's CEO is stepping down from the president's Economic Advisory Council. Travis Kalanick says that his participation has been construed as an endorsement of the new administration's policies. The announcement follows criticism of his decision to work with the White House. The president is convening the first meeting of this advisory council tomorrow, made up of CEOs from some of the country's biggest companies.
The parent of the popular disappearing message service Snapchat has officially filed for an initial public offering. Snap seeks to raise up to $3 billion, even though in its filing it says the company may never achieve or maintain profitability. The highly anticipated IPO is expected to be one of the largest since Alibaba went public back in 2014.
So we know what we'll be doing on Sunday. What will you be doing on Sunday? Well, chances are that you'll be one of the millions watching the Super Bowl. But the business of football has seen better days, and it's hoping that Super Bowl 51 will deliver a touchdown. Jane Wells is in Houston.
The biggest game in America has descended on its fourth largest city, and Houston couldn't be happier.
It's really fantastic for the city. Okay, it's not just economy-wise, but I think overall, you know, for the country, it really means something.
But the Super Bowl is coming to Texas at a time when NFL ratings have disappointed, something the commissioner is well aware of, and the league is looking at ways to speed up the game.
What we're trying to do is to make our product as exciting, our games as exciting, and action-packed as possible. So it comes on various different levels for us, and we have not dismissed any theories about how we can continue to engage our fans more extensively either on television or in the stadium.
The matchup between the New England Patriots and Atlanta Falcons is also seeing a drop in prices on the resale market for tickets. StubHub says the average price of around $4,400 is down 12% from a year ago.
Still, it's the biggest game in town. Betting on the Super Bowl this year could reach $4.7 billion. That's $500 million more than a year ago. And companies are using the game to brand themselves in a new way.
For example, with the Trump administration's emphasis on American manufacturing, publicly traded Party City is making Super Bowl napkins, cups, and other goods in the U.S. with plans to expand.
Being in the United States, having the bulk of our stores in the United States, being close to manufacturing helps our supply chain.
Then there's the company which has its name on the stadium, Houston-based energy giant Nrg.
We're excited to have you introducing the Nrg brand to people.
Oh, me too. I have spent weeks researching Nrg, and it is fascinating stuff.
The company hired actor Tony Hale to create hilarious videos explaining exactly what Nrg is.
That is a lot of people, Mauricio. That is a lot of people. Write this down, please.
Finally, Sunday is a chance for Houston to reintroduce itself to the world as it starts to recover from the bust in oil prices. Security is tight and expectations are high. The last time the Super Bowl was here was 2004, when Janet Jackson had her wardrobe malfunction. This year, Lady Gaga will perform at halftime, but the odds favor a repeat performance in one respect. 13 years ago in Houston, the Patriots won, and Tom Brady was MVP. For Nightly Business Report, Jane Wells, Houston, Texas.
I just hope it's a good game.
Could be high scoring. These are two good offenses.
They are. It's going to be fun to watch. On that note, that does it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody, and we'll see you back here tomorrow night.